A have issued 10,000 equity shares of rupees 10 each. The current market price of the share is rupees 30. So the current market price is 30 rupees. The company has a plan to make a right issue of one new equity share at the price of 20 for every 4 shares held. So 1 share for every 4 shares. It means that the ratio is 1 for every 4 shares. You are required to calculate theoretical post-right or ex-right price per share. That is the first question. So we have been provided with the information like this. Existing number of shares are given 10,000. Market price of the share is 30. It means that the market value is 3 lakhs. That is 10,000 equity shares into 30 rupees per share. Then information is given for the right issue. What is the right issue? 1 for every 4 shares held. So it is 10,000 into 1 by 4. So it is 2,500 number of shares and the price per share is 20. The price at which it has been issued. So 2,500 into 20. That comes to an amount of 50,000 which has been collected from the investor. So what will be the total value of the company? It will be 3,50,000. And what will be the number of shares? 12,500. So we can make the computation of the market price of the share as balancing figure. That is 3,50,000 divided by 12,500 equity shares. And the answer comes to 28 rupees per share. Please write an answer. Now importantly understand friends, over here the question is silent about the point that say how we are going to use this 50,000 rupees. The question is silent about the point that say how we are going to use this 50,000 rupees. So what happens that say we are ignoring that information and we just add 50,000 rupees over here. If at all we have been provided with the information, and generally it would be the case that say we are going to invest this 50,000 rupees in the market, we are going to make investment of this funds in the business, and the business will generate some amount of the cash flow for us. So that present value of the cash inflow is supposed to be added to calculate the value of the firm and not the absolute amount. Over here we are adding the absolute amount because the question is silent about the information that say how this 50,000 is going to be used. Okay? Please write an answer. In order to compute value of firm, comma, amount received itself is added to current value of firm. Full stop. In case we would be provided with present value cash inflow information, comma, the same would be added to current value of equity shares to find value of firm. Full stop. Second part of the question, calculate the theoretical value of the right alone. That is the question. Let us have understanding, let's say how to make the calculation of the answer. The second question is theoretical value of right. Friends, it can be calculated by two methods. I am explaining both the methods to you. Understand it carefully. Along with that, say, understand the logic. Suppose I am holding 4 equity shares of the company. I am holding 4 equity shares of the company. Then can I say that, say, I get an opportunity to purchase the equity share for rupees 20, and soon after the right issue, I can sell it for 28. Okay. So we understand that over here, listen carefully, market price of share after the right issue minus offer price divided by number of shares. We understand that so the offer price is an amount of rupees 20. So here minus 20. Market price of the equity share after the right issue is 28. So we understand that so you get immediate appreciation of an amount of rupees 8. You get this advantage for holding 4 equity shares, so divided by 4. That is the way it is calculated. It is 2 rupees per share. This is the value of the right. So apparently we feel very happy that we get an opportunity to purchase the equity shares at 20 and immediately I can sell it for 28. But actually we should not be happy in this case. Why? Because we understand that the market price of my existing share, which was rupees 30, has reduced to rupees 28. So whatever the loss which I have over there, the same itself is recovered over here. So we understand that over here, so or in this kind of question we can have that's the market price of equity share before, that is say before a right issue minus market price of equity share after right issue. So over here we understand that it is 30 minus 28, that comes to rupees 2 per share. Please write down answer. Now friends, importantly remember that this alternative method will work only if the present value of the cash inflow is not provided to us. Otherwise, always the first method will only work. So generally I suggest to students to go with the first method. I explain the second method because it is important for you to understand that say apparently whatever the advantage that it seems to be like 8 rupees or 2 rupees per share, that is not the actual advantage. It is just compensating the loss that you have on per share basis. Get on note for this. We understand that an investor holding 4 equity shares, comma, will get an advantage of purchasing 1 share at the rate of rupees 20 and selling it for rupees 28. Full stop. This difference is converted into per share. Full stop. Importantly, if addition in value of the firm equals to amount received comma, in that case value of the right is exactly equal to decline in price per share. Full stop. From rupees 30 to rupees 28. Third question. Show the effect of right issue on wealth of a shareholder who has 1000 shares, assuming he sells the entire right. That is the question. Let us see that's how to do answer. Let us have a discussion first of all before we write answer. Show the effect of the right issue on wealth of a shareholder who has 1000 shares, assuming he purchases the shares through the right issue. That is the question. Okay, sorry, third question we have to do first. Assuming that say he sells the entire right. Then the fourth question. So we'll have only a discussion. We understand that the before and after. That is before right issue and after right issue. Before right issue holding 1000 shares. And what is the market price of the share? 30. So what is the market value, friends? Market value would be 30,000. After right issue, what will happen? Listen carefully what I am going to speak. Suppose I was holding 1000 shares, still I am holding 1000 shares, and the price of those 1000 shares is rupees 28, so it is 28,000. Now I renounced my right in somebody's favor. So suppose I renounce my right to make application of the share to somebody, let us say to my friend. So what I will tell to him, that based on my 1000 shares, I can make application for 250 shares. If at all I renounce my right in your favor, then in that case you will have an advantage of purchasing the security at the rate of 20, and soon after the right issue you can sell it for 28. So what is the amount of the advantage that say you are going to get? 28 minus 20, you will get an advantage of 8 rupees per share. So 250 shares into 8 rupees per share. So you will get an advantage of 2000. So earlier your wealth was 30,000 and yet your wealth is going to remain same 30,000. It is not going to change. That is what we understand. Next. Fourth question, let us have a discussion before we write answer for the third one also. Show the effect of the right issue on wealth of a shareholder who has 1000 shares, assuming he purchases the shares through right issue. Try to calculate the answer on your own. Let us have understanding. So information is given that say suppose an investor is say purchasing the shares, then in that case what would be the impact, that is a question. So before right issue I was holding 1000 shares. The price of that is 30. So its value is 30,000. Now after right issue again I am holding number of shares, however that number of shares have increased because this time I am going to buy the shares. So what happens that it is 1000 plus 1000 divided by 4. So it is 1000 plus 250. So we understand that say the number of shares that say you are holding is 1250. What is the price of equity share? It is 28. So we understand that it is 1250 into 28. That comes to rupees 35,000. So 35,000 is the value of the shares that say you are holding. We understand that say in order to purchase the shares you have made a payment. So basically in order to make it comparable we are required to deduct the amount that say you have paid to purchase the shares. So what will happen friends, 1000 divided by 4. To buy this 250 shares you have paid an amount of rupees 20 per share. So 250 into 200, that comes to rupees 5,000. So what happens at say 35,000 minus 5,000? Your wealth will remain same in amount of 30,000 which you had earlier. Again your wealth is not going to change if at all you subscribe the shares in the right issue. Next question. Show the effect if the same shareholder does not take any action and ignores the issue. That is the question. We understand that so this time it is very simple for us to understand. The wealth which was an amount of 30,000 will reduce to 28,000. Why? Because we understand that so the wealth has gone down from 30 to 28. You did not take any action. So there will be a loss of 2,000 rupees. Shall I then answer the third question? Impact on wealth of shareholder. Let us see that say what could be the impact. We can say that say before the right issue and after the right issue. Before right issue, how many shares you were holding? 1000. Price is 30. That is an amount of rupees 30,000. After right issue, number of shares that you are holding would remain same 1000. And the price would be only 28. However, in that case, so you will be having say certain amount in form of funds. Why? Because you have renounced your right to apply for the shares in somebody's favor. So 1000 divided by 4 into 28 divided by 28 minus 20. So it is 28,000 plus 250 shares into 8. So it is 28,000 plus 2,000. That comes to an amount of rupees 30,000. This is the way we are required to show the impact on wealth of the shareholder, and basically there is no impact on the shareholder of wealth, or there is no impact on wealth of shareholder. Get an answer? Wealth of shareholder will remain same, comma, will not change in this case. Next, Answer for the fourth question. Wealth of shareholder, comma, before a right issue will be rupees 30,000. Full stop. After a right issue, comma, wealth can be measured as under. In that write down, value of shares 1000 plus 1000 divided by 4 whole into 28 rupees per share. So 1250 into 28, that comes to 35,000 less purchase price of shares. In that 1000 divided by 4 multiplied with 20, because 20 rupees is the price at which you are going to buy. So it is 250 shares into 20. That comes to an amount of 5,000. So 35,000 minus 5,000, that comes to 30,000. This is the way we are required to write the answer. With paragraph write down. Hence we can see that there is no change in wealth of shareholder in both situations. Full stop. Fifth answer. In case investor does not take any action, comma, then wealth of shareholder will reduce by rupees 2,000. Full stop. It will fall down from rupees 30,000 to rupees 28,000. In bracket write down 1000 into 28. Now the answer is over. I am dictating a small note to you. Whenever amount received itself is added to compute value of company, comma, in that case, wealth will always remain same in case of shares applied and renouncement of right in somebody's favor. Full stop.